morning to all traders and welcome to this week's last day market insights video provided of course to you by Orbex. Eurozone's industrial output fall allowed the bulls to take on a breather and also at the same time take the euro dollar market to a deeper correction yesterday. The truth is that this may continue being the case for a little while as the risk around Italy's budget intensifies, and that actually might work quite well for our technical expectations as well. Now, dollar also on the other side lost. It went actually down a little against the yen and also the Swiss franc, to be honest, as the government yields are falling, while expectations for a rate cut keep increasing as the FOMC approaches. And also, of course, because the jobless claims yesterday in the US came out worse than expected. Now, what we expect for the day is France's CPI inflation. Importantly, the monthly oil market report from IEA, Italy's CPI, and then, of course, for the day, the most important event would be the US retail sales, as well as the University of Michigan consumer sentiment. Then, of course, around 4 o'clock Cyprus time, we have Governor Carney's speech. Okay, and the latest thing to look at for the night, for the week before the week closes, and related to the oil, of course, would be the rig count for the US. Now, starting with euro dollar 60 minutes 1 hour chart, we talked about euro dollar, if not mistaken, on Tuesday. We were expecting prices to complete the impulse up here and then expected a correction. Now, that correction, the A could be here. We could see another correction within the correction as a B at around 113 or so, and then we expect another wave to the downside anywhere between the 61 and 50 Fibonacci retracement, so anywhere between 112 and 112.30, let's say, unless of course if that was the A, that was the B, and that was the C, but normally we'll see at least like wave C moving down to wave 4 of the previous impulse wave. So we're looking at anywhere between these levels, okay, to pretty much weigh in. Now, we have received these two nice signals on the RSI MACD, and for that reason is we're expecting the prices to move a little bit lower. We'll have some sort of ascending triangle over here, ascending, not triangle, it's just consolidation area, but on the upside, with bullish bias, then breaking, steep correction, and here we probably could just have a small break to the downside, and then the B and the C. Now, of course, this would be our invalidation point around 112, because this is the wave A, the impulse wave, okay? But in the not medium term, just a little bit further down, we could also see prices moving 1 to 1.1160 or so without this being invalidated completely. The complete invalidation for bulls would be the 111.200 or so. Now, down on the 1 hour, on the 30 minutes, we'll pretty much talk about the same. So this is the end of wave 5. The end of wave 1 as well, and now we expect prices to correct a little bit lower. This is going to be wave 2 for the impulse, and then wave 3, so we're talking for a very good bullish opportunity over here. Now, as we said, the invalidation level will be here. It could also be where price extends to, right? And if we take into consideration that the extension of this first wave comes down to 1.1250 or 1.1225, this is the exact duplication of this first wave, okay? Then we're probably looking at prices to, reversing at this very good confluence point of the 50 Fibonacci retracement of the full impulse wave, and also the extension, the correction of the extension to the downside. Some minor bias on the bullish side over here. So we might see price move a little bit higher, and then could end up being a triangle over here, okay, with an end down there, and then we're looking for buys. Now on the dollar yen, on the 1 hour, we talked about a similar pattern here. This is an ABC correction. Okay, last time we talked about the euro dollar, I think we were talking about this double correction over here, WXYZ. And this is pretty much wave B of this deeper correction. Wave 5 over here after an impulse, okay, and then we'll have ABC. So we're looking at the C to be completed around 1.07.3. And this would be the exact 100 extension of this, this wave, the first wave, including the correction. Okay, now of course invalidation would be 109.25 because for wave 4, okay, because if prices move above here, that means that this would be invalidated as another wave to the downside. In the longer term, of course, that could end up, you know, just coming up here, even ending like as an expanding, or as an expanded flat or something like this. But I doubt that would be the case. So most likely are going to see prices moving a little bit lower, and this is probably going to introduce a bullish opportunity, which is going to end up as an ABC correction, okay, or as a 1, 2, 3, 4, 5 impulse wave, which is of course going to be identified in the near future, because now it's too early to say anything. So we've seen these two signals that pushed up prices to complete wave 4. That looks like a completion, and then from here we can look at prices moving lower to around 107, anywhere above 107 I would probably assume. Now down on the 30 minutes, we've also drawn the Fibonacci retracement from the previous high. This is the last wave we saw, 1, 2, 3, 4, and we're looking for a last wave 5 impulse to the downside. That is likely to end anywhere between 107 and 107.5, okay? Because this would be, since we broke below this first extension, this would be the 161 extension, or could even end up being a complete duplication at around 107. Okay, so we do get some, we did get a signal here on the bearish side, and that's why prices moved lower. Now, of course, what we need to see 107, what is it? 1 second, 107.800 breaking. Okay, we want to see that breaking and prices moving a little bit lower. This is the zone that we could start looking for bulls to step in. Invalidation point, as I said earlier, 109.15 or 16 or so. So I want to thank you for being with us for another day. If you like the video, hit the like button. I would recommend, as always, that you keep a close eye on our blog, as well. We'll cover the latest news, private trading ideas, and provide all the necessary tools a trader needs. Thank you, and have a nice weekend.